Hey there, Cherry Bombers. It's Wednesday, March 23rd, 2022, and we've got our Cherry Bomb for you today. FXI, the ETF that tracks the Chinese economy. We got a liquidity rank of 4 out of 4, a moderately positive correlation with moderately strong positive correlation with the SPY, an IV rank of 49. And we're looking at 2 trades today because, of course, they sent us a Strangle, and I have a hard time stomaching Strangles. I don't know where you fall on the spectrum, so I'm going to give you an Iron Condor alternative if you stick around to the end, because, by the way, that does help me when you watch these videos to the end. So thank you so much for being here, and let's get going. Hi, everybody. My name is Neil. This is Option Theory, and thank you so much for joining us. We're inside of simulated trading here in Thinkorswim, so we can get all the learning without any of the risk. Now let's pull up the charts real fast here. You can see that, again, kind of like yesterday in our trade on... What was yesterday's trade again? I don't think it filled for me. We're totally blanking on it right now. Give me a second. It was United Airlines. Yes, they had a recent low and a rapid recovery. So what we're looking at here is a neutral strategy, and we're going to take a look at that right now. So over in the Analyze tab here, and I just made my window go away. Let's come back so I can see what you're looking at. Analyze tab, add simulated trade. They have us in the April 29th weeklies, and I say they, that means Tasty Trade, and that trade comes from them in an email to us 4 days a week, Tuesday through Friday. And if you want to get those emails from Tasty Trade too, there's a link in the description down below. It's a bit.ly link. It's only the bit.ly link, so I know if it gets clicked, and it honestly doesn't get clicked all that often, probably because I'm a small YouTube channel, and that's fine. I don't mind being small. There's trade small, trade often, right? So yeah, that's what we do here in more ways than one. All right, so anyway, go ahead and get signed up for those emails, or you can always just subscribe to this channel and watch these videos, or do both. We'd love to be your trading partner. All right, so anyway, now that you know that, what we're looking at here, the weeklies, not a big fan of the weeklies, as you know, because there's less open interest, less liquidity. And anyway, that's where it has us. So the trade here is as follows. It is a short 36.50 call and a short 29.50 put. And that gives us our Strangle over here, which is undefined risk to the downside, undefined risk to the upside. Of course, you have the best opportunity for management on a trade like this. It's much more easy. It's much easier to roll and to manage a trade. However, you know, your account may not allow you to do this if you're like in an IRA, or you just, you can't stomach the idea of it. You waking up one day like we did with Merck being $700 down in a matter of seconds. So, yikes. I know that's maybe nothing for some of you out there, but for me, $700 is significant. Anyway, here we go. So that is this trade here. And we're going to, because this is option theory, because we're testing, right? I'm going to go ahead and right click this trade, choose confirm and send. Here is the window that you can't see. So let me show it to you that just popped up. This is the confirm and send screen. It shows us that our max profit is $100 and our max loss is infinite. That's a scary number. But we're going to go ahead and throw that into our margin account because we can. We can't put it in the IRA account. That's right. When you get a Tasty Trade when you get Thinkorswim simulated trading, you can get 2 different kinds of accounts, and you can practice. That's what we're all about here. So we can go ahead and leave it in the margin account. Go ahead and hit send. We'll go back to the full screen here. And then over in the trade tab, I have the alternative pulled up over here. That is an Iron Condor. And let's take a look at the short strikes, because the short strikes are just like the Strangle. We have a shorty. We have a short 36 call and a short 31 put. That's our Strangle. And then the protection, we're just going $1 wide on this one. I know you may not like that. Feel free to make it wider if you'd like, but I just wasn't getting 1/3 the width. So on this one, you get slightly more than 1/3 the width of the strikes, and doing a $1 wide on this one. So here we are, and I'm going to go ahead and right click this trade and choose Analyze Trade. And instead of having a 66% probability of profit, let's go ahead and change the date, by the way, on this one. That one is wrong. The date for this is the 15th. And we're going to go ahead and set our price slices to break even. There we go. 54%, 55 almost probability of profit on this trade with a slightly bullish bias on this one. So it's not particularly centered, but hey, it does seem to be moving up. So there it is. And what is the P50 on this trade here, this alternative trade? According to Tastyworks, is a 69% probability of making half of the credit. That's right here. I'm not making it up. Same iron condor right here, $1 wide. Just proving it to you there. See, they have $35 as the credit received on this one. And so let's go ahead and right-click this trade. Choose confirm and send. And let me show you that here. Here's the new confirm and send for the alternative. Instead of infinite maximum loss, you're looking at a $64 maximum loss. And instead of $100 of profit, you could make 36 with a 69% probability of making half of that and saying, washing your hands and say thank you, bye-bye. All right, that is a trade. We're going to throw that one in the IRA because it is an IRA-friendly version of a neutral trade. Let's go ahead and hit send. And I recently was asked in one of the comments of one of my videos where I had done, I think, a broken wing butterfly as an alternative. And why did I not do an iron condor? And, you know, I said because the price of the underlying. Sometimes it depends on the size of the underlying. I should say the price of the underlying as to when I do an iron condor or not. So here was an alternative. All right. Hope you liked this video. Big like to you. I like you for being here to the end. So if you're still here, you deserve that. And all right, that's it. Until I see you in tomorrow, hopefully, Cherry Bomb, may the market be with you.